Hi guys, hi everyone. Hope you had an amazing weekend. Each week I will be diving into the analysis of DXY and EURUSD. I trade using ICT concepts, and I just want to take a moment to express my gratitude for all the valuable insights I learned from ICT. If I mix up any names or terms, apologies for that, it's my bad. What really matters is understanding how these concepts work and how to identify key levels. Also, just a heads up, obviously you can hear that English isn't my first language, so please bear with me if I make any mistakes. I hope you find my analysis insightful. If you're interested in learning these concepts, definitely check out ICT's channel, and if you like my analysis, please subscribe to mine. Just a quick disclaimer, I'm not a financial advisor. These are just my views and what I do and the markets. Always do your own research or consult with a professional if you need to. Alright, so let's get into the DXY. Normally I don't look at the quarterly chart in the middle of the quarter. We are in Q4 at the moment, but because this is my first video, I'd like to see what I'm looking at. I think what happened on the DXY is that it moved up and it rejected off of this bearish fair value gap, started moving to the downside, and then find bottom at this bullish fair value gap. As you can see, price couldn't break through the 50% of this fair value gap, but there is another quarterly fair value gap below that. If we jump down to the monthly, what we can see is price created liquidity now on both sides. It came back down first, created this liquidity, took that out, moved back up to the upside, and tapped into the 50% of this move. So this is a premium fair value gap. Tapped into that and moved back down. Couldn't break this low, didn't tap into this other quarterly fair value gap and moved back up. Respected this monthly fair value gap, the 50% of that, moved to the downside, took out this low, and then now it started moving up again in October. The key levels I marked up for myself were these inverse fair value gap. Price tapped into this in October, and then the monthly bearish order block open being this level, and then the monthly bearish order block 50% being that level. If these lows on the monthly chart, if these levels on the monthly chart will be respected, I expect price to move lower. If, however, price raid this level, won't respect this 50%, won't respect this 50%, I expect price to move up all the way and then find the top somewhere in here. But let's just focus on the weekly chart and what am I looking at for the week ahead. So what happened on the weekly chart is that DXY is just in a massive bullish run. 1, 2, 3, 4 weeks of bullish runs. I wanted DXY to come down to this fair value gap, confirming the bullish order flow, and then start moving up to the upside. It didn't happen, but if we take a look at EURUSD's chart, this what you can see in here is the inverse EURUSD chart. The EURUSD actually did tap into this fair value gap, so even though the DXY didn't do that, the EURUSD did do that. So this is a good sign for bullish order flow on the weekly chart. What we can see is on the weekly, just jump back down to the monthly level a little bit. So this is an inverse fair value gap and 2 monthly order block levels. Inside that we have 2 weekly fair value gaps, this level, and an inverse fair value gap being these levels. Jump down to the daily, what we can see is price created high, a low, high, a low, created some liquidity. Last week it took out this liquidity, started moving to the downside, tapped into a bullish daily fair value gap, and then Friday news just created this massive bullish candle, rated both sides of this candle, which is a good indication for a continuation to the upside. This is a typical price action, guys. What if you see this price action when price raise the high, raise the low, taps into an opposing PD array and then moves up? This is a clear indication that price didn't find the top yet and wants to move higher and higher and higher. What's going to be a high, I don't know at the moment, but I am definitely looking for a weekly bullish candle for the week ahead. Let's jump down to the 4 hour. What happened? We do have an SMT for long in here, which is another gray sign. Let's just see that. So you can see this is the inverse Euro USD. On the inverse Euro USD, price created a lower low, and on DXY, price just created a higher low. So we have a daily SMT for longs on the 4 hour. What sticks out for me is this inverse fair value gap for first, and then on the 1 hour there's another BPR in here. Obviously a lot of things are going to happen the following week. I would expect something like this to happen. I'd like to say that next week will be the US election week, so most likely this will cause a lot of firework at the markets. So it can easily happen that I won't find any clean setups because of that. If that happens, I will rearrange my views for the following week, and then we'll see how the price is going to develop. However, for now, the way the things are looking is that we can expect price to come down and do this. That's it for the DXY. Let's now look at Euro USD. So this is Euro USD, the quarterly chart, guys. So what we can see in here is that price is in a massive bearish run and then started pushing up higher. In the long run, I expect price to move higher, take out this liquidity and tap into either this fair value gap or start touching these bearish order blocks, this being the wick, open, 50%, and so on and so on. Let's see the monthly chart. So the monthly chart is very interesting actually on the Euro USD. So after it started moving up, like so, it came back down, created some liquidity, it took out this liquidity, started moving to the upside. It didn't respect this bearish order block, which is a clear indication for me that price wants to take out this high. Initially, I expected Euro USD to come down and tap into this bullish fair value gap. But if we look at just one more time the inverse DXY, what we can see is that price actually did tap into this fair value gap. So it's not necessary for Euro USD to come all the way down and then move up. However, I still expect some kind of down movement and then move to the upside. But as I say, it can also happen that price will move down, tap into this fair value gap, and then move all the way up to these levels. What we can see on the Euro USD, which is another interesting factor, is that we have this bearish fair value gap. Price stepped into this one time, second time, the third time, and then the fourth time. So this looks like a very strong level, which price constantly keep respecting. After price stepped into the second time, it moved back down, took out this liquidity, moved back up. As I said, it didn't respect this monthly bearish order block. I expected price to move up all the way. It didn't do, came back down, respected this bullish order block, and then started moving to the upside. For me, this kind of price action is a low resistance liquidity, so I expect price in the long run to come down and take out these liquidities as well. One being here, the second one being there, and the third one being here. But as I said, this isn't completely necessary at the moment. let's look at the weekly chart. So after price respected this bullish order block, started moving to the upside, came back down, rejected off of this inverse fair value gap, made another push up, came back down, respected this fair value gap, made another push up. And this is the kind of price action what I was talking about during DXY. Price makes a high, raise the high, then raise the low, and then moves all the way up to opposing PD arrays. This is a typical way of price moving. Price went through a lot of bullish PD arrays and didn't make a reaction. So last week what I was looking at actually is this fair value gap, and I told myself if price is going to come up to this level and then push back, this rejection will indicate me a bearish order flow on the DXY, which actually happened. The downside is that we have a weekly SMT for long. As long as this low is not going to be taken out on the DXY. If we jump down to the daily, this is exactly what happened. This is the weekly bearish fair value gap. Price came back up. So first it moved down, up, down, raided this high, tapped into an opposing PD array, and on Friday started moving to the downside. Clean price action. We have SMT on both sides, as I mentioned. There is a weekly SMT in here, and actually if you check the daily chart, we can see a daily SMT for short, because the inverse chart of the DXY, you can see that price couldn't break this high, but EURUSD did break this high. So we have SMT on both sides, a daily SMT for short and a weekly SMT for long. But as I say, if DXY will break this low, we won't have a weekly SMT for long. So let's look at the 4 hour just now. After this step into this weekly fair value gap, what I can see right now is that possibly we will have this as its original consolidation, and then we can see a 4 hour market maker sell model is being the original consolidation, a push down, another consolidation, and then another push down. It's very clean. We can see that price broke the structure already, so we can be looking for some fair value gaps and order blocks for the week ahead. At the moment what I can see is we have a 4 hour fair value gap in here, an inverse fair value gap on the 1 hour, and then one more inverse fair value gap on the 1 hour chart. But again, I just like to mention that Tuesday will be US election, so can easily happen that I won't find any clean charts. But if it was an election week, probably I would be looking at this kind of movement, trying to find a Tuesday, Wednesday high of the week, and then trade it all the way, targeting first Wednesday's low, previous weekly low, and then all the way up to monthly bullish order block, and then see how price will react after that. So that's it for now, guys. I hope you found this insightful. Have a good week and take care.